It's recording.
All right, welcome to part 2 of Introduction to Smart Money. So that I want to take out this screen and let me give you maybe something that is feasible, because it might not be this picture perfect, it will not it might not on screen. So I just give you what is feasible, what you are going to possibly see on the screen. So should I send this to us? Let me capture this and send to us. Okay. So let me see if I can just give you maybe like an example. After this, we'll go to the chat. Please, while I'm teaching, just prepare your questions. It will help me to know areas to tackle. Just teaching from my head, it's not really the best approach for teaching stuff like this, you know. We're just trying to do guesswork, but if I have your questions, I can easily know areas to tackle. Is that okay? All right, so let's say, for instance, we have trying so hard. Maybe something like this. Price goes up. This takes this liquidity, and then price still breakable. So now you know that price has done one thing. You must be mindful of liquidity sweep. Why does price go for liquidity? Because the market is driven by liquidity. Liquidity simply means money. Liquidity means money, positions that are left running. So people are buying here, and if banks wants to buy, they need that volume of position. So they can't just stay here and just keep buying up. So they want to first of all trade down. All the people that are buying here hit their stop loss. Because if you're in a trade, it's just like a normal market analysis. There's a buyer, there's a seller. If you are buying, somebody is selling. If you are selling, somebody is buying. Everybody cannot go to a conventional market and be buying at once. There are buyers, there are sellers. That's why I call a marketplace. So the chart is a marketplace. The same place where you are buying, other people feel that, okay, price broke down, price should keep selling. Because there are a lot of retail concepts that we use to trade. Some people trade this kind of trend line. And for those that trade trend line, they tell you once price hits the line the second time, a trend line has been established. So they wait for price to hit first hit, second hit, then third hit is a short trade for them. Yeah, second hit on the trend line establishes the trend for trend line traders. Then third hit is what they now take their entry. So just take their entry around this zone on the trend line, stop loss at this low. And then they want to take price up. Why there are some people that will say, okay, once a trend line has been broken, so price comes like this and take trend line, they feel that, all right, price should trade back and test the trend line, then price should sell. Maybe something like this. Price breaks a trend line. So, okay, since price broke the trend line, price comes to retest here. And then they sell. So once they see this happen, they just, okay, they play the trend line and put stop loss on maybe some few pips, and they want to start selling. So there are so many concepts that people trade, right? In this on the chart in Forex, synthetic, features, derivatives, everything. There are so many concepts people trade. But all we trade is smart money. What is that smart money? We want to keep our buyers open. We want to keep buying. We just keep buying until price gives us our model formation that violates structure, which is a break in market structure. So even if price can't break the trend line, I'm not concerned about the trend line. I'm concerned about this low that is here, this low. So until this low is captured, the trend line doesn't matter to me. So I want this, my low, to be captured. That's only the time I'm going to feel, okay, price has violated my position. So I'm waiting for this low to be captured. So once this low is captured, I won't enter on the trend line. I'll wait for price to come for a retest up, which is 50% of this move that took this high and captured the low. The move that took this high and captured the low. So I'm waiting for 50%, maybe somewhere around here. Why those that trade retail concept like trend line, they want to just take it from the trend line, have their entry here, maybe stop loss around this zone. So sometimes price can just come play around and they will adjust their stop loss. They know surely that price will go down. They'll keep adjusting their stop loss until price now come back. But you see, we don't trade all this kind of stuff. What we just want to trade is we want to trade their signature. What is the signature they are showing us? That's why we call it price action. What are they showing us? There must be something they are telling us. There must be a model that they are showing us. Okay, if you see me do like this, over time, people have been able to read them that, okay, when price does this, this is what we should expect. And you know, every trade is probability. It's not like it's 100%. Sometimes it can go your way, sometimes it doesn't go your way. That's why we now talk about the concept of risk management. It's a probability. The best trade is probability. And what we trade is high probability. So what's the high probability? Price has taken liquidity, price broke structure. Then we are sure that price will want to continue that upward trend. So for instance, price gives you this move, come here, and then pushes up. Maybe something like this pushes up again. And then maybe price just keep going up. And all of a sudden, price breaks here. Price starts coming down. Price come to all of this. Maybe somewhere around this zone, and price blast up. Let me just explain something. So let me remove this so that we have a clearer view of what I'm trying to paint a picture. I don't like teaching like this again. I like going straight to the chart so that you are seeing it from the chart. So let's read this price action. Price was giving us this high. See this low created. You call this a high. Or was this a low? I don't know. But we'll call it a low for now. Price give us a high. Price give us a low. Price give us a high. Price give us a low. Price give us another high and low structure. So if I want to label this, all right, if I want to label this, I'll call this a break of structure. All right. I'll call this a break of structure. And then you can see that entry, price will always come back and give you that entry. Then let's check where price started from. Price started from here. Because this was liquidity sweep. This was a break of market structure to the upside in the direction of the trend, or we call that buy side liquidity. So this is a BMS to the upside, or we call it buy side liquidity. Sorry, sell side rather. Okay, maybe something like this. So this is break the market structure or sell side liquidity. Buy side liquidity, sorry. So we have that price broke structure after sweeping, broke structure to the upside. Now, what am I supposed to do when price was here? Is to check 50% of this and capture it. So price didn't come back to that 50% and price left. So long price didn't come back to it, it simply means that that 50% is still there. Is still there, unmitigated, and price left. So this is what, this is simply liquidity. Okay, this is liquidity. Let me do something like this. So this is liquidity. So price needed to come back to that place. We're still bullish. Price has broken the structure. Price started selling down, but we have unmitigated zone that was here. Is that okay now? It's an unmitigated zone because overall trend or overall trading range, this is my low range or range low, is my low range overall. That's my low range overall. This is my top range. Range high. This is my range high. You get now? So when all these things happen, you still keep this unmitigated zone in mind. Price may come there today, tomorrow, I don't know when. But if price comes, they still expect the bullish move. So let's assume you cut this sell and then you start taking price down. You cut this sell or you missed this one and price came down. When price get to this place, remember there is an unmitigated, well, let me just, do I call it a demand zone? Okay, it's a demand zone. Yeah, let me just call it a demand zone. I want to start writing long run. So we have a demand zone here that has not been mitigated because this price left. So this to me is simply liquidity. You see how the price came back to it and price rallied up to clear this. This is what price will always do, like always do. Sweep liquidity, break structure to the upside, and price will find its way back to this zone. So it's sometimes it's not just instant like what you have here, price break and just come here. No. Sometimes it's not just this instant, price just go up, come here. Price can run away and come back later. Like what you have here, price just broke, came back, and but this sample now, you see price left, gave you some days. Like the boom 500, or let me still talk about this 25. See, price never came here. So it means that there is a zone here that has not been, is unmitigated. So this is, I don't know when price is going to come here. I don't know. But if the price comes here, expect that market should still give you your formation here. If market gives that formation, you can still buy up. Same thing. You get now. So price has given you in on the weekly now. This is just one leg. This is just a one leg move on the weekly. This is a one leg move, and this move happened when? This was December. Yeah, it happened December. Yeah. So should be okay. So this happened around December 2022, and price is yet to come there as at August today, being told. August, yeah. Price is yet to come there. So it can take, only God knows when, only smartphone knows when. Their position here is still in drawdown. But will you have been able to still get entries? Yes. Trading structure. Price still gave you moves. Up, price came here, gave you the low, price gave you another higher high. So price broke this structural point to the upside. What are you going to expect from this high to this low? Allow 50% of here, price should come back just to 50% of it. Then you find your entry. If price give you that move into 50%, yes, price came back sweetly into the 50%. And price broke. We're expecting price to return back. The price didn't return. Price came, created a high, a low. So if you keep following structure, you can keep trading all of this move. There was a time we traded all this move. Price gave a high, a low, and price closed above here. So immediately price closed above here. You want to start looking for 50% of this move. So all of this move, 50%, price will come back there. 50%, that's why I'm waiting for price. And if you watch the videos in the library where I taught this, I've always said that 50% of this move, you will find interesting things there. Other block is there, fair value gap is there, this another block. This doji was the other block. That was the other block. See how the price just came and tapped it, filled this imbalance here completely, tapped into this other block, and that was how price left. So that you don't stress yourself, you can just take the whole 50%. Whole 50%. And then allow that formation. If you go to lower time frame, you see how the price gave you this model formation that we spoke about here. Price gave that break and retest before price bought. You see it there. So price gave you that break and price broke this high. So this high, this is now the top range. Just want to keep looking for buy opportunities, not selling opportunities. This was the down range. Top range, down range. Price has closed above. So you expect that price should come back into 50%. So if I took 50% of this top range down to this down range, you can see price came to the 50% of it. Okay, that would have been how you'd have gotten that play. Price comes here, then allow price to give you that model. Price came here, gave you that entry, and price rallied high. Price later came back to weak at this, but at least price rallied high, giving you more than a 1 to 10 or 10 free, like I'm sure of this 1 to 10. Price came back, swept all of these lows, and broke structure. I have not gone to a lower time frame, but you can see how all these weeks, this was liquidity sweep. Liquidity sweep. Price swept all these lows, and price gave you a breaking market structure. Sweep break of structure. And within that break of structure, there was an IPA. So after many years of price trading away, price ticket back to that IPA. You get now, price ticket back to the IPA. Though price didn't feel it, but price tapped into it and gave you a break of structure. Look at the break of structure. Look at that break of structure. Price broke structure here. Price came back to more than 50% of this low. They're taking 50% of all of this low. That broke structure. Price came to, that was the entry there. You catch this entry and you want to take price to this zone. So price did all this move here, came back, this second entry here, price went up and blasted. After price blasted, price came back to maybe a cube here or another block, and then price blasted. That's just how you want to trade structure until price came here and violated structure. That was the structure. Price violated, price started coming down. Let's check 4 hours. You see that there was a break here in 4 hours. Let's see the 4 hours. Okay, that was the zone. I think there was a break in market structure there. See, price broke structure. Clearly, broke structure. Price broke structure here. And see, so when price broke structure, what am I expecting? 50% of this move. That's 50% of the move. As we have waited for price. See, price didn't touch the 50%. Price never did. But at least price came here and gave you a clean distribution coming here. Because I would have waited for this IPA that was here. There was an IPA here, which I would have waited for within this place, making it valid. But price didn't respect it. Price just tapped into the open and price ran down. Yet price still gave you a break of structure when price came here. See, price broke structure here. See, that was the break of structure. When price broke structure, I'll be looking for 50% of this. So from this week to this zone, that's a 50%. And price came there beautifully. That's a price came. So price broke structure, traded back into that candle. This is 4 hours. So this is not going to be one day. This is 4 hours. 4 hours, 8 hours, 12 hours, and then 16, 20. So it was after 12 hours that price returned back into that place. And that's why trading is patience. You want price to come here before you start hitting your target. Price came here, gave that move in this zone, and price traded down, like traded all of this move away. Price came back to this zone again, gave another break of structure. You can see that's a break of structure there. That's the signature you must wait for, like you must wait for. We have what we trade: structure, trading range, liquidity, bounce, and they are all treated in other videos. And the one I posted on YouTube, all you need to have all you need to be profitable. I think I posted that. Send the link to us. Then for Mr. Dan, I think I'm going to add you, Mr. Dan and Mr. Alex. If you're on the call, I'll be adding you to that video much later. 1 minute, let me just show you. I treated the components and how we make use of them on charts. I treated that. So let's see. Okay, can we get that loaded today? Just 1 minute. Sorry, just give me a few minutes, please. All right, all you need to have, okay, this is it. All you need to be consistently profitable. Zone of our course. You see, it's a private YouTube for only those in the mentorship team here. I have other videos also which are also private for mentorship team. These videos are also in the library. Yeah, but for those who want to make use of maybe their night sub or access it, yeah, I will also add you to all this one so that when you come to my channel, you can have all these private, you can watch them as well. For this video, I did justice to all the trading components, how to make all these entries. See what price did? Price broke structure, and price came back and still swept the high. So this was liquidity sweep. And then price broke structure again to the downside after sweeping. They want to now start looking for entry. Price didn't come back to this IPA that was left, but price gave you a distribution here. Broke structure to the downside, price retested here, and price started going down since then, like since then. See, price has been going down since then. So you'd have been able to just get entry on this zone. And then we called out this zone. Remember, we called out this zone. Yes, we called out this sale that is currently happening. And I did say I was going to speak about it in the call tonight. And thank God, I just remembered now. Price has been bearish. You can see the momentum. The high, a low was created. Higher low was created. Or lower high rather, then a lower low. So first, price came into this IPA. And price closed it beautifully, like beautifully. That was the IPA. Price came into it and closed it. And price gave us another low, breaking above this low. So when price was coming back, I marked this out. Either you take 50% of this, yes, and wait for price to come here. Yeah, 50% of all of this. But I had the other block marked. I had the other block. That was the other block. That was marked. That's the other block. So I was waiting for price to come here to this other block. and then we sell from here. I send this out. Now I'm going to explain my entry. Price was going to come here. We start looking for sell opportunities. So I knew that price would take this week that was here. If you have watched our videos on internal liquidity, this was internal liquidity to be captured. So I know price was going to capture it. So I was waiting for price to capture this liquidity and then we can sell. You can see how beautifully we'll be selling since today. The day opened and then price went for the high. Look at it. Price captured that internal liquidity. If price come to this IPA low, there was an IPA here, price didn't come there, but price was already in the other block. So I was expecting price should sell here. Now what do? We wait for a 15 minutes break of structure. I've explained that 15 minutes break of structure within the zone, and then you want to look for entry. So that was the 15 minutes I saw. A high, a low. Price broke this structural point. That was my break of structure. Price broke this on the 15 minutes. So let me zoom it out very so that you see it. That was the 15 minutes break of structure within the zone that I was waiting for. So when price broke this structure, I knew that we were in for something big. Price should come back and we sell. So I was looking for all of this, 50% of this move. That's where I was waiting that, okay, price should come back here and then we can sell. All right, if price come back here, we'll sell here. But I was looking again for what was inside this place. Was there an IPA? Was there another block? I couldn't see another block. I just couldn't see another block. I couldn't see another block. I saw this, all of this choppiness, so I wanted to take the entry on this internal liquidity. This was internal liquidity. You can check out the videos for internal liquidity. So there are two ways I did this. You'd have taken entry on internal liquidity and stop loss here, which was 4 pips plus 3 pips, that's 7 pips. Because we had extra 3 pips, that's 7 pips. You see, you were not kicked out of this trade. You were not kicked out of this trade. First is 1 to 3, which obviously has been met at this zone. So let's take it from this low. First is 1 to 3. So this low that be my first TP. Are you getting it now? But I've also talked about time frame analysis in one of the videos. You need to be able to merge all the time frames together. Yes, just match all of them together. So I went to 30 minutes. I went to 30 minutes. Let me show you what I saw on 30 minutes. I saw on 30 minutes that, look at the body of this candle. The body of this candle didn't close above this body. This was the last high. Look at the body. The body didn't close above, but it took out these highs. So I knew that this was simply liquidity. So smart money was interested in sweeping everybody that was already selling here. So I knew this was liquidity sweep and price was going to break structure. So liquidity sweep was clean, price came for liquidity, and price now broke this low. But already 15 minutes has told us that we have broken structure already. 15 minutes broke structure already because even 30 minutes was clean. That's it. Price broke this low. This 30 minutes. This 30 minutes BLS. So I know we want to sell, but I was waiting for, all right, let's see what price we took here. When price came here, that was first entry. Then I go back to 50 minutes. So I came back and I said, okay, price came back to it. Now I use the second formula, the second thing I thought about, daily candle, right? Daily candle. Let's go back to the daily. Let me show us now how I use daily candle to be sure that this thing was still going to keep going down. Now, This was the daily candle. I remove all of this, not necessary for that. Price was in my zone. Price was in my zone. So looking at daily candle, I saw this candle was bullish, bullish. This candle was a doji. I knew what it meant. So I was waiting for candles. We do two things. Candles we take low and high of the previous day. So watch this candle. When this candle opened, it didn't take the low of this candle. It took the high. Is that correct? Yes. Closed there. Then this candle opened and took this high. Look at this candle. Open, it didn't take the low, it took only the high. Then watch this candle. This candle took this high. Look at this candle, took this high. Now watch this candle. We're already at our zone. I saw this candle went, took this high too. And now it has taken the low. So if I am to mark out this previous candle, this was the previous candle. That was my previous candle. That was my previous candle. You can see how the price came. You see, price took the high of the candle. So price taking the high, what did I teach about daily candle? Look at the open. This was the open of the candle. Open of this candle. This was it. So any move around up here, we sell above opening price and we buy below opening price. So I told us in that video that a candle has these same characteristics. If you open here, if the candle is going to be bearish, if you first of all buy, it's going to be bearish. If you first of all buy, after buying, it will now come back and sell. It will now come and sell. Then it will now come and close. This is how a candle is. This is the formation of a candle. So if it's going to be bullish, if it open, it first of all sell, then it will buy, then it will come and close. That's how a candle is. That's the formation of a candle. Any day, anytime. So when I saw this candle went open here, rallied high, took this low, I knew it's going to be bearish. Because if it was going to be bullish, it would have opened here, go down first before going up. But it opened here, went high straight, took this. Look at this candle. When this candle opened here, it first of all came down. So tell you it's going to be bullish. It came down first, then bought up. It's bullish. Look at this candle. It opened here, no wick. It opened at the same where the other candle closed. That's where the candle opened. So it opened here, straight. It bought up. Heavy momentum. Look at this candle. This one opened here. It first of all pushed down before it pushed up and now closed here. Because this was bearish, so this candle closed here. So this one opened here, sold down, bought up. So as it sold down, I know it's going to buy up. I don't know. I just hope you get what I'm trying to explain. I just hope so. So I saw this candle clearly. This candle clearly opened here and then bought up, took this. So I knew this is my liquidity sweep. That's what price came to take. Now, any model formation that looks like a bearish formation, I'm going to be interested in taking it, like any model formation. So what do? Go to 5 minutes. Any model formation you will see in this candle that is above opening price. Remember, this is my opening price. This is my opening price. This is the opening price. Any model formation above. Watch, that was the model formation. Which you can see, okay, that was it. Boom. Price came here, broke structure here, 5 minutes, and price started. So that was my first entry. Price came back again to opening price. Remember what I said? We buy above opening price or at opening price. You see, price came, broke down, came back to opening price. So that was second entry. Second entry, stop loss here. And then we just want to keep going down. So this has given us a 1 to 2 already. why this entry, which was here, has given us more than a 1 to 3. Yeah, a 1 to. Just go back and watch that candle. It's on the YouTube. How to use daily candle to spot entry. I think it's on the YouTube. Yeah, it's one of the most watched video. It has 4,000 views already. Just go back and watch it. And then I have another how to use daily candle for entry in the library. The mentorship one I held before is also there. Just try and watch it. You're going to get some few things from it. So that's this trade that I'm still expecting that price should keep going lower, like lower, because of the daily bias. We want to see price push down lower. Just want to see price keep going lower. Want to see price come here. So the only time I expect price to come back here is after maybe a 4 hours clearly break, like what you can see now. 4 hours has broken structure. So price will come back there. See, 4 hours. Let me remove all of this. Price has broken structure here on 4 hours. See, price is giving a 4 hours break of structure. Okay. So since price has given us a 4 hours break of structure, the next entry now you just wait for price. Price will return back here. So when price return back here, you can look to join the selling opportunity stand. Price will come back here to take this week as internal liquidity. Because if this candle closes, this candle is already bearish. All right. If this candle closes, whether around here, the next candle open, let's say it opens around here, it's going to first of all buy. This is going to be bearish. Then it will sell and not come and close around here. I don't know if we got this concept, but that is how we trade basically.